Hey everybody, good afternoon. Welcome to 12-Minute Trading. Today is Monday, the 10th of Crashtober. Today is, Monday, March 10th in 2025, and we're seeing some distribution across the markets, and we have some thoughts on that today. Dave, let's just get right into it. You brought this up last week, and I think what we're seeing is this is a verification that what we sort of thought about or we thought we heard is now confirmed.
Mm.
You know, it's we are going to support the bond market, and we are going
Yep.
to make the equity market the sacrificial lamb.
Yep. And I keep saying it. The key to this whole thing, anytime that you can hear Scott Bessent, who's our Treasury Secretary, speak, he gave about a 45-minute interview last Friday on CNBC. You can go find it. He's the Rosetta Stone, and he keeps tapping on that drum of we are going to lower rates, and the only rates that they can control from an administration standpoint, the long end of the curve. How do you get rates to go down? You have to get people to go to bonds, right? You have to get more investment in bonds. Remember, it's inverse relationship, right? So bond prices go down, or bond prices go up when people pile into them. Rates go down. Rates go up when bond prices go down and people pile out of them. So we are seeing that already in the first month or so of the administration. We've got the 10-year down to about 4.18, I think I saw today. I think the critical thing is to get below 4. So we'll see if that actually transpires here sooner than later. But how do you do it? You strike fear in the hearts of everybody so they run to safety. And what better way to do that than to crash the market down and sacrifice the market so that, everybody rushes towards safety. That pulls rates down, and that's how you do it. And they will always crash the market to save the bond market. The bond market is the biggest market in the world. It's the real market. So that's really what we're seeing. So, and there's a lot more to it, in changing of the actual the way that the U.S. operates, period. But for now, that's just we're seeing the very beginning of that. So
The other thing too is, and this is kind of funny because this is like one of those movies with a bunch of subplots in it. Obviously, the Fed cannot do anything this
nope.
entire week. In fact, they're on quiet period. They're not allowed
Yep.
to talk. So until
Yep.
next Wednesday, you're not going to hear a peep out of the Fed. Now,
Right.
you're going to see some reports this week like CPI, PPI, but in my mind, this inflation war is yesterday's battle. That's last year's
Correct.
battle. This year's battle is about the job market. It's about the growth of the economy and where the consumer is. But I think more to the actual bond market, it's all about rates. And so Trump he tried to work Powell last year to say, oh, you gotta drop your rates. It's not going to happen because Powell and his buddies are still fighting last year's war. And so
Yeah.
you're not going to see any drop in interest rates next week when the Fed gets together. There's a 97% chance right now that nothing's
Right.
going to happen. Now, he may signal that, oh, well, in May, we'll take a look at the data and all that stuff.
That's what
You
the
know,
market's going to be watching for
you
is
know,
the change in language.
it's the
The
same thing.
I will say though, if you start to see the 10-year rates get into the threes, that will give the Fed every cover they need to lower rates.
Right.
So that's something to watch. But yeah, it's not. I don't think that's going to happen by next week. But to see their language change to where, hey, we're like he started that kind of last Friday, like the economy's in good shape, but we're here to support it, kind of narrative, right?
Right. There
So
was a little bit of a shift there,
yeah.
and the market actually did rally based on those remarks.
And Friday was kind of a fake out day. Friday's one of those days that, you see that massive gap down and then it reverses into
Yeah.
positive in the close. That's usually a good short-term bottoming signal. Maybe you're going to get a relief rally. And then we came in today, and today really is, I think it's just the excuse. But Trump was interviewed over the weekend, and he said that tariffs are going in place. The reciprocal tariffs are going in place on the 2nd of April, and if need be, they'll go higher, right? And that's what everybody says the market's latched onto. I don't know. I think the market is just it's more of a buyer strike than anything. The
Yeah.
big boys aren't buying,
Yeah.
and selling begets selling, and so there's nobody in buying today, and that's what we've got now. it's not fun. I've got a couple of positions that I still have to manage through that. I've gotten pretty light on my positions and a lot of cash on the sidelines, but still, it's never fun to have to do that, right? But I still think we're going to get a rally here, and the reason is, and maybe it starts this week, maybe it starts next week, but typically we're going in the last few weeks of the quarter, and typically you're going to want the big boys are going to want to show some gains on the books for the quarter. They're going to show some positivity. So whatever catalyst it is, if it's CPI or whatever else comes out. I mean, oil's been down the last month, so CPI could be lower. That sort of thing. Whatever catalyst, you're going to get some sort of rally, I think, at some point here. The key for everybody is you got to be careful with this. I think we could even see 6,000 or close to it on the S&P, maybe by the end of the month, beginning of April, just right before those tariffs go into effect. It's just, do we roll over from there to what would be the low of this move? And, Doc, you can bring some charts. We were just looking at them, prior to this, where we've seen this kind of before, right? I can confirm now, at least by the way I read it, the weekly chart does look to be releasing lower, but it doesn't mean it goes in a straight line. Sometimes we get these nice rallies in the middle of it that then roll over to the lows. So why don't you bring up an S&P chart and we'll kind of talk through some of that.
Okay, here's your weekly chart, and you're now below the lower Bollinger Band, and we do not have any positive divergence showing up on the MACDs, that's for sure.
No. So, and we've got if you have the energy on it, we're down to about 50 now. So to me, once you get to about 50, that's pretty confirmed. So I always say that's usually that confirmation. And if you look back, you can see these times where we've gotten, moves like what we're seeing now. You can just, see it I'll go ahead and we'll pull up a few more years there. But you can see like these moves in the past where you get these red candles like we're seeing, and then you get the one green candle, in the midst of it, right? So for example, you can look at, what was I looking at earlier? I was looking at, where was I? All the way back to September of 2022. You had a drop of about, what was it? I think about 400 points or so on the SPX. Let's see here. Yeah. So we dropped from 4,300 to about 3,900. And then all of a sudden we had about a 200-point rally for a week. Right? And you can see that on there. And then we kept the selling going. So in a move like this where we're really kind of unwinding, it looks like, that's kind of the type of thing. You're going to get a rally, but don't think that it's over, right? You have to be prepared. So that's a good time to clear. It's kind of what I'm playing for in a couple of my trades. Good time to clear, anything to the downside. And then, take advantage, selling on the top side some, but, let it then roll over, or confirm it's going to really find that support there and keep going before you go all in on things. That's kind of where we're at in this. This is, we're in the fifth inning.
This is real similar to how 2022 started. Now, remember
very similar.
That, here was all of 21, 2020 and 21. I mean, this is very, very linear. Remember that tops are a process. So a market top is always very difficult because it sends people in the wrong direction so many times. Now, kind of to Dave's point, the initial move lower back here was 12% to the downside. So that was enough to get your attention. And then we rallied straight up for 2 straight weeks, almost up to the all-time highs. So we almost reclaimed the highs. And then what do? We sold down for like 5 weeks. And then look at this rally that we had for 3 straight weeks up, and that made a new high. That made a new high relative to earlier in the year. And so everybody was like, oh, okay, check, we're all done. We're going to be heading higher again. And that was simply the monthly lower high. So what this has to do is this has to propagate. So let me pull up the full S&Ps here, the full S&P fractal chart. So when something goes like this, right? So when it starts out with this is, I'd say this is now the shot over the bow. This is like
Yeah,
basically,
we're getting capitulation today.
yeah. Well, we'll see whether or not we will or not. But I mean, this is to get your attention. And then now that everybody's going to be going bearish at some point, to Dave's point, we're probably going to see a counter trend rally based on, it could be anything. It could be basically the Fed next week saying, "Oh yeah, we're prepared to
Yep.
step in and offer, easing to the market." That'll send it straight up because that'll bring rates down. Right.
Hmm.
So this is where the trouble begins because this sets up a lower high in the weekly chart. And so now we get the weekly chart going into a downtrend. And so then after that, it gets even more fun as we get an extended rally and then the monthly chart goes into a downtrend. So this is where the
Hmm.
monthly chart would print a lower high and we go into, so this becomes a propagation from one to the next. And we are at the I'd say we're at the second inning right now. We're very
Hmm.
early in the ball game. So this is just the shot over the bow that gets your attention that changes the picture. Now, what we had talked about was we'd already gone into sideways and volatile back here in December. So the market character had changed. We changed our trading. We went to more sideways markets, and those continue to do fine, but it's not the same as when the market's going like this. So we have to adjust our strategies, and very likely we're going to have to adjust them again before this is all over. So our job is always to, boy, I've created a mess here, but our job is always to sort of stay in sync with what the market's doing and stay one step ahead of it.
And and to a bigger point on this, guys, we and we've if you've been watching us since even last summer, we said 2025 all bets were off, and it's because in order to really, Trump is trying to undo 100 years of um, progressive work on the economy and the way the world is set up in 4 years. I mean, that's really where we're at the beginning of it, right? So regardless of your politics, that's really what's happening. And so the way he sees it is that, the US has basically become the slush fund for the world. And it's hard to deny when you're 36, 37 trillion in debt, and a lot of things we're seeing with, the money going where it goes and all that type of stuff. And so he's basically like, no, we're going to stop doing that, and we're going to become, the growth engine again. And his whole thing is to bring everything back home. So like we hollowed out manufacturing. I'm from the Midwest. I remember growing up, what manufacturing was big and it's gone, right? So he wants all that back. He wants to make us that engine again and stuff. Now, think about that. You got literally 100 years of going out and creating that kind of global economy like that, and now it's gonna need to come back home, right? Now, $2 trillion in the first month of investment is pretty good. He's got that, without giving any tax break or anything for it. But it's a long way to go, and I've said it. To do this is an incredibly tough thing to do. It's like a balancing act, right? Because you got a government that's spending 7 trillion, taking in five, right, every year, and so you've got to bring that down to where you're at least taking in five, spending five, right? But at the same time, that 2 trillion is what's propped up the economy. In fact, that's what you're seeing in the stock market, right? That's what's inflated assets. It's just that money slushing around in there, right? And so it's like everything coming back down to earth. And so at the same time, you have to kind of, you know, like this with the economy. So like the tax bills got to get done fast, for that relief, right? To to Main Street and so on and so on. And so that's kind of like the balancing that has to happen. And it's a nigh impossible job. So it's going to be messy, and we're seeing what that looks like to be messy. In the end, if you go through and pull it all off, will the United States be in a better position, both physically and for its people for the future? Probably. But are we strong enough to go through that pain to get there? And that's really where what we're going to find out, I think, over the next few years. So, yeah. The only other thing, guys, that I'll say right now that I have been watching, I have been opening trades on is gold, GLD. So gold has been hanging. It's down a little bit. GLD's down a couple bucks today, I think, but that makes sense with the market being down like it is. But gold has been hanging. Gold has actually been the trade over the last year. Is up almost 45-50%. So something to put on your radar. And then I know Brew had a question on outside of getting a cheaper mortgage, he had a question on Bitcoin.
So this is a chart on the Bitcoin spot. And I'm seeing an opportunity for the price support to come in a couple of places. So first of all, here's the swing trade or the swing test on this whole big weekly mess, which is out here. And I'd say that's lower 70s. Okay, so that's one thing to hang your hat on. Second thing that we can look at, now we're looking for confluence here at that level. So confluence, we can take the major fibs up here all the way from the bottom near the FTX bottom where things fell apart back in 22. And we're looking at a 38.2 retracement. That's at 73.5. So another number coming in right at 73.5. And notice how well this lines up with the top of the swing test. So boom, 73.5 right there. Okay, next thing that we can look at is we can pull up the fibs from the minor swing here, which is in August, so the bottom in August. And notice that that also comes in right around the same level, 72.5 in this case, and that is the 61.8% fib. So right around 72 to 73, I would say, is our back up the truck number, and have a limit order down there and see if we actually get down to that level. There may be enough buying support where it doesn't even touch it. Yeah, so I'm always looking for what's called confluence. What, like one indicator by itself won't do it. Things like this, like we're seeing anchored VWAPs coming down here as well too. Anchored VWAP from these levels is important. We're also seeing, this is one I like in particular, the weekly Bollinger Bands are down at 75,000. So the weekly Bollinger Bands during a bull market are an excellent place to pick up inventory. All the tests that are out there. Now, of course, when the market changes polarity into a downtrend, that's only a marginal place to pick up inventory. In fact, it's not recommended. But during an uptrend, and we're still in an uptrend, by the way, until this is violated, this is an excellent place to pick up inventory.
Yeah, I'm a buyer of Bitcoin here, guys. I started, when we got in the low 90s, I started just averaging in again. I actually buy daily. So I'm just averaging in on this. Again, it's a long-term thing for me when I look at Bitcoin, but when we get these 20-30% moves off the highs, I typically start to average in again. And then slow down once we get up to the new highs again, and then wait for it again and do that each time. So it's worked pretty well over the years. And you got to do what you can, but I get more aggressive at times like this. Even if it goes down another 10 or 20 grand, I'd still be pretty aggressive at it.
Hey, so we also got a Jim Cramer contrarian alert.
Oh yes, Jim Cramer said sell everything and buy Johnson and Johnson. So don't buy Johnson and Johnson and start buying everything. But no, I mean today, guys, I think to me, Doc, I know you disagree, but we're down 170 handles on the S&P. To me, this is capitulation day, and maybe we end up 200 handles down by the end of the day here and kind of wash this thing out. And then we kind of I don't know what happens over the next few days. I think we're gonna have to go through some melee. We're gonna need a catalyst, maybe CPI ahead of the Fed or the Fed itself. And then the next few weeks, I think we get that rally at some point. And then, like we talked about, then it's do we roll over and do we really hit the lows? And the lows, I think we talked about the target being somewhere in that 5,300, 5,400 range.
The trouble that I have is that I've seen capitulation before, and it somewhat looks like if we look at, and I love looking at pictures of or the tick charts intraday because it shows volume sensitive profile, and we're just not seeing any movement at all. It's just like this. When I've seen capitulation, it's been like this. It's like the price just drops like a stone. We go limit down or close to it, and then what happens after that? It's almost like pulling back an archer's bow. It's like that. to me, a waterfall decline is the best form of capitulation that I've ever seen. And we used to see it in the markets, and it's just not there anymore. And I think today we have just a whole bunch of buy the dippers, which are just continually being stopped out.
Faded.
Yeah, so
Hmm.
just fade the buy the dippers. And so until we get that actual, so today's, I will admit today's candle is very impressive. That is one hell of a big
Hmm.
red candle, the old BRC. But it's not by itself. Just a big red candle won't do it. It's the way in which the bottom. So we really need some kind of hammer to come along, which is a real long tail. So we drive way down and then we drive up in the last 2 hours of the day, back up into the
Hmm.
highs. And that usually starts out a little bit of fun. We go pogo sticking for the next
Right.
few days, and then eventually we achieve rotation off the runway. Um, but yeah, just this candle by itself is looks good, but it's just not the
Well, I'll
type of
tell you, man,
capitulation.
it's getting close to bargain time, guys. I mean, you gotta. That's the other side of this is this is why I've been keeping a lot of money dry on the sidelines is because you're just getting to some levels to where even if you're not at the bottom entry point, like Tesla's down 30 some points again today. It's down to 224. So, it's getting to a point 200 or so on Tesla is not a bad place to get into Tesla, right? There's just, Nvidia's at 106, right? Palantir's at 75. I put a trade in to get that at 70 last week. So, I'd love to get Palantir around 70. It might get there by the end of the month. That's what I set up the naked put trade for. But man, there's just some great potential entries coming up here, and there will be guys. This will end, and you will get further rally, and all that. This is just an unwinding and a flushing of a lot of weak hands and stuff, and that has to play out. So
Yeah, even
anything else? Let's see here.
a lot of good companies on sale. Yeah.
Yeah, Brewhead's having fun today. A lot of good companies. Yeah, a lot of good companies on sale. They are. And it's funny because everybody's like, it's like, I won't touch Bitcoin at 110. I'm really not going to touch it at 75. Like, it's like the same thing. It's like, I won't touch Tesla at 400, and I'm really not going to touch it at 224. Like, this is, man, be fearful when others are greedy and greedy when others are fearful. This is, why do you think Buffett had, and we were watching it, Buffett was hoarding cash. I bet you're going to see Buffett, when you see Buffett start to put some cash to work, that's probably a good sign that you've got at least a support level coming in and stuff. And I'd watch that because he's got like 330 billion on the sidelines that he's going to probably start putting to work here. So um, so watch those things. It's good opportunity, guys. It's good opportunity. It's not fun to manage a few trades for it through it, but that happens. And we stay profitable as we manage them and stuff, and that's just the nature of it. But it's
The
I tell you what, the opportunities that we have on this are pretty damn good.
the
So
other thing that's happening is there's a fade against U.S. assets, and there's a long against some like Chinese
yeah,
have been
oh yeah,
real strong lately.
well, it's because Chinese are stimulating. They're
India.
they're throwing money at everything.
So there's opportunities in ETFs and ADRs offshore as well too. So
Yeah,
Dave and I are talking this week later on, and we're going to figure out what we want to get on sale. And it's probably not going to be the same usual suspects. Like the Mag
right.
7 may be a little bit tired for quite some time. That's been my experience. Is like usually when the former leaders get faded, you're in for kind of a tough period for a while. So we may look for some new leadership, which is going to be a little bit probably more conservative for
Yep.
that. So maybe under something
Well,
under staples and maybe in retail, things
and
like
you're
that.
seeing that.
Yep.
Actually, if you look at Verizon today, Verizon's
Oh,
up
Verizon
because
is.
people are piling in to get, it's safe, but he has a nice dividend and that type of stuff. The Dow's only down about 5%. I don't know if over
Yeah,
this period, right? So the
yeah.
Dow is definitely holding up much better. Being down 5 or 6% versus 10 to, I think Nasdaq last I looked was down 13. So that's definitely a lot of money piling into the blue chips, those kind of dividend players and stuff. And that's what you think when there's fear and everything. Where do you go? You go into that stuff, right? And that's why you see bonds and bond rates come down and that sort of thing too. So,
Yeah,
quick
yeah.
cue for me. What do we got?
I was looking at. Yeah, go ahead. I was looking at some of these, like in the Dogs of the
Yeah.
Dow, like just some of the bottom feeders of the Dow. Actually, we're not looking all that bad. Like Coke is starting
Hmm.
to work. Coke is getting on to play.
Yeah.
I don't think I'll be buying Nike anytime soon, but like Walmart, this may be a good time for a buy point on Walmart. I'm not touching Merck. I'm not touching Disney. Nvidia still may be in play if you can get it at the right price. I think if you can get it somewhere, at a reasonable price, I think it's still in play. I think the AI,
90.
well, even yeah, 90 or below, I think would be good on Nvidia, because I don't think the AI play is anywhere near to being over yet.
And Brew, to answer your question, I set it up. I just set it up as an alert, and then it'll pop for me, and I use it as a trigger. So I then look at like where we're at in the scheme of things, where I am at in relationship to the time on the trade, and then I manage it accordingly. So I got like my SPY one that hit today. I didn't manage it yet because I'm right now within a couple points of it. So, and I've got till Friday, so I've got some, probably a day or two before I have to do anything. So if we get a bounce, that trade's gonna win out really, really well. So I want to manage it. What I'm not gonna do is like do it day to day though in this mess. If I roll it, it's gonna be a week out or 2 weeks out, and just move it out, reset it, and then just do it that way. But 3x is typically my trigger to either exit if I'm right there, right? Like if it's right there and I can exit, and I think things are just gonna continue to collapse. I do that. When you have a day like today that opens like today, it's really hard, right? But otherwise, it triggers me to manage it. So hopefully that helps you. The price alert is on the spread price. So if I've got an iron condor that I got, 30 cents for, right, then my trigger would be one of those spreads is worth 90 or more. I just set that alert in Thinkorswim. Cool.
We are at the lows of the day. We may
Yeah.
hit 10% by the time that we
I'm telling you, you'll be down 200 handles on the S&P today.
we're actually within. We are within. Oh man, I hate this charting package. We are within. So you can see this here.
What's your tick chart doing?
This is the 10% level. This is the 10% correction level. This big yellow line that I've got. So we're literally within what 40 points of that, which is a few minutes work. So
Yeah, I mean, you got the NDX down 883 today.
you got the Dow down over 1,000 points. So this
Yeah,
is this is yeah, this there's going to be some panic right now.
I'm telling you, like that's what I'm saying. Like this is in the new world of zero DTE. To me, this is capitulation. It's really, when's the last time we were down a hundred? The last time we were down this big on the SPX was December after the Fed meeting, I think. We had that one day, yeah. What was it? We were at like 60, 50 and dropped all the way to what, 58 something? We were down like what, 200 and some points? So this rivals that day. And then what happened in the next days after? We went almost all the way right back to where we started.
Sector rotation's all defensive right now. It's all into
Yeah,
staples and
it's
energy.
another one I saw was up today. Let me look here. Yeah. Like you'll see it, like look at the payroll companies like paychecks. Um, those type of things you see go up because they again pay a nice dividend. They are stable, payroll stable. It's consistent revenue business. They get a lot of float on their money. So you see like those. You see Verizon's of the world, AT&T's of the world. A lot of those you get that rotation in. That's why Kramer was saying Johnson and Johnson, right? So which is up a buck or so. Um, So a lot of those you're going to see rotation into. And then they'll rotate out as soon as things are good again, or they feel they're good again.
Yeah, selling puts on AT&T is not 2%. That's not a bad return. Easy money on AT&T, 2%. Okay.
A lot of people, that's what they do. They just sell puts on these guys.
All right, guys. Well, enjoy the volatility, and if we still have a market, we'll be back next week. As long as the S&P is above zero, we'll be back here next week.
Yeah, we got. If we have some money left, we'll be back. But now we're at 188. I'd say we're going to hit 200 points on the S&P. It may waterfall off right here at the end of the day. And,
that could be it. That could be your capitulation.
Yeah.
All right, guys. Thanks. Cool. Have a great week. We'll see you guys next week.
See you next week.
Thanks, everybody. Take care.
Bye.